The top business stories live from the Sky newsroom. A boost for the UK economy as the OECD upgrades its growth forecast, but also warns it will suffer from the highest inflation. The co-op returns to profit despite being hit by a huge rise in shoplifting. And the UK's biggest online property portal, Rightmove, rejects a third bid from Rupert Murdoch's REA Group. Hello there, very good morning. This is Business Live with me, Emma Crosby. The UK economy has leapfrogged over several G7 countries in terms of growth. That's according to the Organisation for Economic Cooperation and Development, which now has the UK joint second in its forecast for the rest of the year. It's also warning, though, that Britain will have the highest inflation in the bloc. In its latest global forecast, the OECD predicts growth of 1.1% for the UK this year, which puts it alongside the likes of Canada and France, but behind the United States. Well, I've been speaking to the OECD's Chief Economist, Alvaro Pereira.
I think it's important. The emphasis on growth is key, and the emphasis on reform is key. In fact, what we're saying around the world, not only for the UK, but around the world, is that now that we are turning the corner on inflation, it's time to turn the corner on fiscal. That means to go to fiscally prudent policies and also on reforms. In particular, in many countries, creating businesses is still too bureaucratic. There's too many barriers to competition. And in sectors like energy, telecom, and transportation, there's more ground to have more competition and to have also to have more dynamism there. So I think this is one thing that is important to say is that in what we've heard in terms of growth, I think makes sense. And we look forward to continue supporting the UK on the reforms that the UK needs to become more prosperous and to grow more.
So far, house building has been mentioned, planning reforms. We also heard more about GB energy yesterday. Does it go far enough?
I think planning reform certainly is quite important. We highlighted in our survey as well. I think the childcare reforms that have been highlighted is important, but it's important to implement them. So it's crucial to have all these reforms, but then implement them afterwards to make sure that they are implemented. And as I said, on infrastructure, this is an area that we think that is quite important. The UK has been underperforming for about 8 or 9 years regarding investment. So when you do the reforms and you are able to bring more business confidence and you are able to bring a better business environment, this will help to bring more investment, and with more investment, more job creation and more growth will come.
Is the government right to prioritise fiscal discipline and plug this so-called £22 billion hole in public finances first with the much-awaited budget that's coming up at the end of October?
I think fiscal discipline is absolutely essential, not only for the UK, but for many countries of the world. Just to give you an idea, since the global financial crisis in OECD countries, public debt went up by 40% of GDP. What this means is that we have the highest debt levels in many countries, including the UK, in peacetime. And so if we want to continue to giving the preference that we need for health, social protection, and so on, we need to be fiscally disciplined. And this is even more important if we take into account that besides high debt, what we have is a situation in which we have more spending pressures for the defense. We have more spending pressures to invest in the green transition, and we have significant more spending pressures regarding aging costs. And so all this is going to add up in the next few decades. And so it's absolutely essential to be fiscally prudent, to be able to reduce debt levels so that the interest payments that we pay on debt goes down. Remember, when you have bigger interest payments to pay because you have more debt and because now we have higher interest rates, that means that you have less for healthcare, less for infrastructure, less for other things that the government spends. So it's absolutely essential to go back to fiscal discipline.
Let's just talk about inflation in a bit more detail. You're predicting a 2.7% increase in inflation this year, which means the UK still will have the fastest growing prices in the G7. A lot of people will be wondering, why is it that prices here are still rising faster than prices in our neighbouring countries?
Well, it has to do obviously with demand, but also has to do with still the kind of the hangover of the energy crisis. The energy crisis really hit the UK significantly, and we're still facing the consequence for that. And of course, wage growth is happening as well, so there's a recovery in the purchasing power. This has an impact on inflation. But I think the message regarding inflation in the UK is that it's moving in the right direction. We believe that the Bank of England is doing what needs to be done, maintaining prudence, which is absolutely essential, taking a very close look at every single reading that we have in terms of labor markets and inflation. And so, deciding in each meeting what to do, taking into account the circumstances that the data is telling us. So we think this is the right way to go, which means maintaining prudence. But we also think that if inflation continues to come down as we expect, there'll be margin to lower interest rates, which will help obviously families and also businesses.
We've had one 25 basis point cut already. They decided to hold last month. What is your prediction of where interest rates will be in the UK next year?
Again, more than discussing how many cuts are going to happen, what matters is that there'll be a significant, it really is going to depend on the data. We forecast, a path of the rates that there's fairly similar to what the Bank of England is planning to do. But I think what is important to say, this is going to be highly data dependent. So that means that it's going to depend how we're going to evolve in the next few months, including whether we're going to have other risks that we don't see right now, or some risks that we have right now for the UK economy and the world economy will get worse. So that will depend. But I think what matters is that the rates, we think there is room to lower rates. And what matters is to maintain prudence in terms of monetary policy and make sure that we are able to continue to have core inflation and headline inflation coming down.
So when Andrew Bailey, the governor, says they are coming down, but they're not going to get back to those levels we saw during the pandemic and after the financial crash, would you agree?
I think that's true for the UK, and it's true for almost every single country. Remember, the level that we had before the pandemic was also after the financial crisis, and there was a few other crises, and then there was the pandemic. And so that's why I think central banks decreased rates quite significantly. And, we knew that there was not a risk, inflation was very low at the time. After the pandemic, with supply chain constraints and bottlenecks, and then afterwards the energy crisis, we saw that inflation crept up quite significantly in many countries. And their monetary policy, that is raising rates, tightened monetary policy, is absolutely essential to be able to control the rising prices. Because we saw that, in fact, we have some interesting figures in our report that show that in many countries, food prices with respect to inflation and to wages, food prices still continue to be higher than they used to be compared to wages, even though there's some recovery in the overall purchasing power. And so people, when they go to the supermarkets, they still feel the pinch, and they still feel that they lost purchasing power in terms of how much their wage is able to buy in the supermarkets and the shops. And so it's absolutely essential to make sure that inflation continues to come down in a durable way, so that you're able to ease monetary policy, lower rates, and in that way help the rest of the economy.
That was the OECD's chief economist, Alvaro Pereira, speaking to me a short time ago. But let's have a look at some other news stories now. And the Co-op says crime rose sharply in the shops over the last 6 months, with 950 offences taking place every day. It says the cost of theft and fraud in its food business rose by 19% to £39.5 million in the first half of this year alone. It comes as the retailer has moved into the black, reporting pre-tax profits of £58 million for the first 6 months of the year, compared to losses of £33 million a year ago. It's also announced it's opening 120 new shops by the end of 2025. The UK's biggest online property portal, Rightmove, has rejected a third bid from Rupert Murdoch's REA Group. The Australian suitor, which is majority owned by News Corp, upped its bid again yesterday, valuing the company at £6.1 billion. Today, though, Rightmove bosses unanimously rejected the latest approach. UniCredit has sought to assuage regulatory concerns over a potential takeover of Commerzbank. UniCredit's chief executive said they would not ask for a board seat at the German lender, despite potentially becoming its biggest shareholder. The Italian bank has been amassing shares in Commerzbank in recent weeks, but was met with opposition by Germany's government and Commerzbank's board over the position. Let's have a look at those markets for you now. The American equities on the Dow and the S&P 500 closed on near record highs again last night, with American markets slightly more reserved this morning in anticipation of some US economic data. In Asia, overnight, Shanghai is still benefiting from yesterday's surprise stimulus package from China. Other markets trading, well, a bit of a mixed picture you can see there. Over to Europe now. European markets have been edging lower when they opened this morning. It's now very much a picture of the red, apart from the Italian market that's pretty flat. And let's have a look in more detail at London. The FTSE 100 is trading slightly higher at nearly 0.3%. In terms of individual stocks, the big winners so far in London today are Rentokil this morning, announced ex-Merrill Lynch analyst Brian Baldwin as a non-executive director, as well as the Mexican miner Fresnillo and NatWest Group, also trading higher by 3.7% and 2.8% respectively. Shares in Smiths Group also trading to the upside this morning. If you remember, yesterday had a torrid day when they were Europe's biggest faller this time yesterday morning after full year results which were not well received. They are trading higher now, up by 2% or so. Let's have a look at the fallers, though. They include the insurer Prudential, as well as Sage, trading slightly to the downside. Actually, Prudential's increasing those losses now, down by 1.75%. And on to the currencies for you. The pound, after a very strong run, has given back a fraction of its recent gains, trading slightly down against the euro at this hour and against the dollar. The pound trading now at 1.34 against the greenback. Finally, let's check in with the cost of oil. It is largely unchanged this hour, following that brief rise due to Middle East tensions last night. 1 barrel of Brent crude will currently set you back 0.6%. We're joined now by Daniela Hathorn, a senior market analyst at Capital.com. Daniela, welcome to the programme. So we had that big boost from China's central bank, a huge stimulus package which got everyone excited yesterday. Has that excitement run its course today, would you say?
Well, I think in part this is seen as a last-ditch effort from China to revive its struggling economy. We've seen from data in recent months, specifically with consumer demand, they've been lagging. And we know that China is one of the powerhouses behind consumer demand, and it affects general sentiment in the market. So I think we do have some caution creeping in. I think people are starting to question as well why the extent of these measures. I know we were expecting some sort of involvement, but direct support for the stock market and for mortgages does potentially give a little bit of concern to investors. Why are they having to see this level of intervention? And I think people are starting to question, is this going to be enough? We've seen in China a track history of bubbles and not really being backed by consumer-led demand, and that really is an issue for the economy. So if we're not seeing that demand side follow through after these measures, people are really wondering what happens next. Do we need to see fiscal demand? And also China's biggest problem has always been excessive leverage, and these measures don't really target that at heart.
The world's second biggest economy. Let's focus on the world's biggest economy, the United States, and some pretty disappointing numbers on consumer confidence coming out last night. For the month of August, of course, that doesn't take into account any feel-good factor from that massive interest rate cut they had last week. But what is your reading on consumer confidence in America right now?
I think we're expecting to see these sort of readings get worse. I think people have had to, we've had cost of living crisis, not only in the UK, which is something we talk about a lot, but also in the United States. People are feeling the pinch of higher inflation for so long, and central banks have been very adamant, specifically the Federal Reserve, holding until September to cut rates with these higher rates and how that affects spending in the country. So I don't think it's a massive surprise, but it does set the mood, or it plays nicely into this mood of the economy is softening. It's not really a hard landing just yet, but we are seeing that slower growth that really helps the Federal Reserve lower rates. And I think if we're looking at market pricing once again for the next rate cut, we are leaning slightly in favor of 50 basis points again, which that would mean a whole 1% of cuts in just 2 meetings, which is quite significant. And what does that mean for sentiment? We still have to see. But obviously, this consumer data does weigh a little bit on those expectations.
We talk about landings, don't we? Hard landings or soft landings in terms of trying to bring the economy back down without falling into recession. Do you think the Fed will be successful in enabling a soft landing in the States?
I think so far it has been. I think we've seen data remain resilient. I mean, we only have to look at last year, and we saw those GDP data from the US really.
Okay, Daniela, I'm so sorry to interrupt you. We have to go live to Liverpool now. The Labour Party conference is voting on whether to cut winter fuel payments. Let's listen in.
Can I ask people to sit down? They're asking for a car.
And as we listen in, let's chat to Tamara Cohen, our political correspondent, who's standing by. And Tamara, protesters at the conference making their views very clear this morning on scrapping the winter fuel tax, winter fuel allowance. Tell us about this vote and whether it'll make any difference.
Yes, so what's just happened in the hall there is there has been a vote on reversing the cuts that Labour have announced to the winter fuel allowance, and it has passed. This was a vote put forward by the trade unions, led by the Unite Union, which has over 1 million members. They've said that this is the wrong decision, and the delegates at the conference have voted with them, waving their hands in the air. It's just it's a hands in the air vote, and they clearly support that motion. Now, this is not binding. It doesn't mean that it's actually going to be reversed. Keir Starmer made very clear yesterday that it's happening. Pensioners will be losing their winter fuel allowance, but it shows the strength of feeling on the subject. There were protesters in the hall. I think you just saw there the chairwoman telling off those protesters. But it does, and you can hear them there, save the winter fuel. And Sharon Graham, the General Secretary of the Unite Union, who moved that motion, when she did so, she said about Labour, she said they promised jobs, homes and education. The story at the election wasn't one of tightening belts for some of the poorest in our society. So clearly a lot of anger among the union movement and among some at the Labour conference here about that. Labour are not changing course. We've just heard from the Work and Pension Secretary, Liz Kendall, from the main stage, saying that if Labour did not make these kind of decisions, they might be in a position where the economy crashed like it did under Liz Truss. They are very determinedly going ahead with it, but it has not been popular. It was not. We didn't hear about it before the election. It was a decision made afterwards, but clearly. You can hear from those protesting here in Liverpool this morning. There is a lot of anger about it, and clearly the clear message we've had from this conference is that at the end of October, when we have the budget, there will be more difficult decisions to save money.
And tomorrow, so
that Unite vote carried.
OK, great. Thank you for that. And of course, as you say, this vote is non-binding. But it's still embarrassing, isn't it, for Sir Keir Starmer? And it flies in the face of everything he's been trying to achieve. Is it also a sense of what could come, could still come?
Yeah, so the vote, so the decision to scrap the winter fuel allowance for 10 million pensioners, only the very poorest will be able to claim it. It's passed Parliament. It was a difficult vote, but it got through. And the opinion polling on the subject, I mean, there was a poll in July when it was first announced, which suggested the public were about half and half on the subject of whether pensioners should keep that allowance. Labour have been at pains to say that there will be a rise in the state pension next year. They believe pensioners will be better off in the longer run, but clearly there are people who are going to suffer this winter, and it is embarrassing. It's also an interesting sign of what the unions are going to be like for Keir Starmer. Labour have a massive majority, and while some in the union movement feel that having these clashes in public is not necessarily the best way forward, they'd rather perhaps make representations behind the scenes in order to blunt the impact a bit, perhaps make changes around the margins, offer more support for this particular winter. Clearly Sharon Graham, the leader of one of the biggest unions and one that's been the biggest historic donor to the Labour Party, Unite, feels it is very much in her interest to have these rows in public. I think that is an interesting message to Keir Starmer, that when in October at the budget there are more difficult decisions, more cuts, as he clearly signalled yesterday, Unite are not going to be taking those lying down. They are going to be criticising the Labour Prime Minister in public, and he may have quite a rough ride from the unions, despite the fact that many of the things the unions do want, workers' rights, renationalising the railways, all those things are happening, and they say they're happy about that, but they're very much not happy about this, and they're making their voice heard.
OK, tomorrow live from the Labour Party conference. Thank you. Still to come on this programme on Business Live, a big stimulus package boosts the markets we were just talking about, but is more needed to revive China's flagging economy. Do stay tuned.
Big stories don't always come from big cities. I'm Lisa Dowd and I'm Sky's Midlands correspondent, and this is where I grew up. We can reveal that the driver who hit Harry Dunn is 42-year-old Anne Sakulas.
Just met the president and we never thought we'd get this far.
This is what they're up against, that the wind is the really big problem. It is back-breaking work and the smoke is thick. It's been working well. Water levels are dropping, but no one knows what impact further rain will have. What would you do if this place wasn't open? We take you to the heart of the stories that shape our world.
It's really scary. We're terrified.
In this community, I'm told that everybody knows someone affected by COVID.
Hopefully this will be the last wave.
I never knew they would make it. It's amazing.
Change seems tantalisingly close in this corner of the UK. Wales was the first to introduce the plastic bag charge. This is my patch, my specialism. It's also my home.
Weeknights on Sky News.
This is your chance. Tell people. Welcome to the Politics Hub.
Our police force has apologised. If you want to find out about Grimsby, you come to the docks.
I'm live in Jerusalem. Are you not concerned that that could lead to all-out war?
Hello there, good evening. There are fears of an upsurge in violence. What's at stake here?
You are watching the press preview, a first look at the front pages as they arrive.
Day of this conflict.
They keep telling us that they want aid.
And this is what's left of it.
Why only in America?
People want their country to work.
Just want a job in a normal life.
Why are these homes empty?
I want you to be honest with people.
That has happened within minutes.
Sky News, the full story first. Free wherever you get your news.
Traveling is not just about the destination. It's also about how you get there. Fly Emirates, fly better. Fly Emirates, fly better.
Hi there, welcome back. You're watching Business Live here on Sky News. Let's get back to Liverpool now. The Labour Party conference wrapping up, really, and it's just voted on whether to cut winter fuel payments. That was a motion put forward by Unite and CWU, and the motion has just passed. Our political correspondent, Tamara Cohen, is there on the ground getting the very latest for us. And this really flying as a direct challenge to Sir Keir Starmer, you could say.
Yes, that's right. The trade unions had wanted to have this vote on reversing cuts to the winter fuel allowance on the day of Rachel Reeves's speech, which would have been a real challenge. The Chancellor saying these are the tough decisions we have to make, did get cheered in the hall, and then to have had the vote on that day would have been quite a contrast. The people who arrange these conferences managed to make it so that the vote was today after Keir Starmer has already departed for New York. So it makes it less of an obvious challenge, but still humiliating to see all those Labour activists standing, waving their placards and saying that they don't agree with this decision to remove the winter fuel allowance from 10 million pensioners this year. Important to say, this is not binding. it is still happening. The government is still going ahead with it. This just shows the strength of feeling on the subject. And the trade unions, this was a motion put forward by the Unite Union, big donor to the Labour Party. Its General Secretary, Sharon Graham, has been very publicly critical of the decision. When she moved the motion, she said about Labour, they promised jobs, homes and education. The story wasn't one of tightening belts for some of the poorest in our society. Now, Parliament has already voted for these cuts. They're going to be happening this year. Millions of pensioners will not be getting their winter fuel allowance, and the government have defended it. They say, look, we have to make tough decisions, and that some of the poorest people are being encouraged to apply for a pension credit benefit. They're being encouraged to apply for other hardship benefits that they may be entitled to, and that next year they'll get a raise in the state pension. So all in all, the government say they will be better off under Labour. But look, it's been a very controversial decision, and this Unite Union say that this vote shows the strength of feeling among the public at large. Opinion polls suggest that it's not quite as clear-cut as that. People do understand the case for it, but look, it's not been easy. And I think it's a signal to Labour of two things. One, that when they announce further cuts, they could be very difficult and that they'll have to manage the message around it very carefully. And two, that the unions are prepared not just to oppose behind the scenes, but to oppose vocally and publicly every step of the way.
And just briefly, because we're nearly at the end of our time, but does this give a sense of the challenge ahead for the government to sell their budget at the end of the month?
Look, the government have got a massive landslide majority. They can get through Parliament almost anything they want, but MPs aren't necessarily happy about it. And it's a reminder to them that these are tough decisions involving ordinary people. And the message and what MPs, what cabinet ministers themselves do, freebies and so on, all is a bit of a bad look when you're asking people who haven't got very much money to tighten their belts. And so I think that's something that's very much in their minds.
More from you shortly tomorrow. For now, thank you very much. That is it from me. I'll be back with the afternoon edition of the Business Live at 4:30. All your markets being wrapped up then. In the meantime, I'll leave you in the capable hands of Kamali Melbourne with all your business news as the Prime Minister says British nationals must leave Lebanon immediately. The very latest on the breaking news coming up now.